So let's talk about where there is relative value, because I'm a layperson now. I can't see it. I see stocks going up 100, 200, 300%. I think to myself, I cannot buy at these levels. Where can you still buy?
There are two baskets of stocks. Those have benefited fundamentally from COVID. And in the space I look at, the internet space, it's the online retail names, it's the streaming names. So online retail would be the Amazons of the world, the streaming names like Netflix, and then the web presence companies like Shopify. I don't think there are any bargains in that group. The market has correctly seen them as COVID winners and has priced them up. Then there are the recovery stocks, those who were negatively impacted by the COVID pandemic and still are. And those are the ride-sharing companies, the travel companies, and maybe and to some extent, the advertising names as well. I think there are definitely some bargains in there. The question is when you're going to get paid for them, because they do require almost a full recovery from COVID conditions, and that doesn't seem to be likely near term. So you have to be more patient with those names. But the Ubers, the Lyfts of the world, and the Booking.coms of the world, I think those offer the best bargains in the space.
Hindsight is always 20/20. But in hindsight, we can say that, hey, it was pretty easy to buy stocks at levels that we saw back in, say, mid to late March, as opposed to the record highs and a number of record highs, near 36 record highs in the NASDAQ composite that we've seen so far this year. Is this a situation where you can buy these, but you have to leg into them, or are you picking spots? How exactly do you then go about picking out where you think the best investments are, and how long do you hold them?
Well, if you have to be, if you want to buy the ride-sharing names and the travel names, you're going to have to be willing to own them for, I think, 12 to 18 months to get real appreciation. It really, you have to make a bet on when we're going to be out of these COVID conditions. When travel is going to be more robust or match the levels that it had in 1999, and that may not be until 2022. I think the market would discount that back, 6 to 9 months. So that's when the trade would really work. So I think that gives you a sense for how long you have to wait on those names. And even on the COVID winners so far, I look at these, they're more like grinders. I think Amazon's can continue to outperform modestly. I think the same case can be made for Shopify. They're far from bargains, though, at these prices.
Are you looking, though, still at the large cap side of things, or is there kind of an area maybe in the mid cap region or perhaps down the market cap chain where there is not the 200 to 300% gains that we've seen? Salesforce isn't a $250 billion company. Are there companies out there that kind of fit that mold that you can say, hey, maybe they'll grow into that in 5 or 10 years?
Yeah, thanks for the setup on this, Dom. We have seen that small caps are relatively dislocated versus large caps, at least across the internet sector that we look at. There's a couple of names in there that I think have been discarded that I also think are interesting recovery plays and may even work without a full recovery. And I'm thinking of names like Roku and Stitch Fix. They have lagged somewhat, particularly in the case of Stitch Fix. And I think there's an opportunity in those names here.
Now, if you take a look at the whole thesis for technology, are there big themes that you see maybe starting to fizzle out a little bit? Or are there themes that you see kind of playing out into the long, maybe secular term, maybe 10, 20, 30 years from now? What exactly is the biggest thing in your mind about what the trends are in technology?
Look, the single biggest trend that we're looking at economically, socially, maybe even politically is COVID. And I think that that's had a multi-year pull forward of demand. I don't think we're going to reverse at all. I think you leave people in these kind of conditions for what's now 5.5 months. That leads to structural changes in human behavior. So I don't think there's any fizzling out of the acceleration that we've seen in online retail, in online entertainment streaming, or in the need for digital presence. The reason that the cloud companies have done so well, even though their fundamentals haven't really inflected up, is that there's, I think, a correct intuition on the part of the market that we are structurally going to be needing greater cloud capacity in the future. If for no other reason, but it's a big reason, is work from home. I think work from home is something that's clearly going to be dramatically more part of the landscape, the next 5 years than it was in the last 10 years, precisely because of COVID conditions.